if they're right.
Yeah, I'll be squinting.
Okay, I think we go right. I think we are live, everyone. Yeah, welcome to today's Gelato Dev Meetup. We got some exciting guests joining us today. And yeah, maybe I think what makes sense if we all just do a really brief introduction about ourselves and the products we work at, or projects we not represent, but like we just are part of. And yeah, I can just quickly start with myself. My name is Hilma, legendary member at Gelato. And yeah, we automate smart contract functions on all the different EVM-based compatible networks, and also build a protocol called GUni, which is an ERC20 wrapper around Uniswap v3 LP positions. That is a core part of today's discussion. And yeah, with that, I will just give it to Ari to also give a quick intro.
Hey everybody, I'm Ari. I've been the lead dev on this GUni project, which is kind of an application on top of Gelato's automation infrastructure. Yeah, you heard it's a wrapper around Uniswap v3 positions, maybe giving a tiny bit more detail. It's useful because Uniswap v3 liquidity positions are non-fungible. So if you have a fungible wrapper, it can be used in DeFi protocols, different types like lending and borrowing markets, as here with Maker, but also for liquidity mining schemes, it can be useful. So anytime you need an ERC20 token to be the LP token of choice in order to do the stuff you do in DeFi, this makes it possible so you can still utilize Uniswap v3 markets, but also integrate with your DeFi stack of choice. So anyway, that's me. I'm Ari, dev at Gelato.
I guess I can go next. So I'm Sam. I'm on the protocol engineering team for MakerDAO. I was in charge of sort of integrating GUni into the Maker protocol. So that's sort of my role and how I'm relevant to this. So yeah, it's been a fun process.
Yeah, and then last but not least, as I may say so myself, no, no, I'm just kidding. I'm Frank. I'm from Oasis.app, and we build a front end for the Maker protocol to not only borrow from your own tokens, but also multiply is how we call it. So that create leverage-like positions on, for example, ETH, WBTC, and others while using the Maker protocol. And we've recently also enabled this multiply functionality for GUni. So yeah, I think that's one of the main topics. So that's it.
Awesome, cool. And so maybe to just give a very quick context to what today's discussion is about. Let me maybe just quickly share my screen here to just like give some visuals about what we're actually talking about, because there are a lot of different projects and moving targets here, right? So first of all, what's the most important thing here is that you can, as a user of Web3 of Ethereum, you can provide liquidity on Uniswap, right? And providing liquidities was, or in the past, it was pretty straightforward. You had that kind of like range across which you can provide liquidity for a specific token pair, let's say USDC DAI, and it used to be super wide like this. So you provided kind of like the whole range from 0 to infinity. And for a lot of tokens, this didn't really make sense because the liquidity provided was very much underused. And now with Uniswap v3, what you can do is you can actually just pick the range that you want to provide liquidity for very specifically, and just say, hey, I want to provide liquidity for, I don't know, for USDC DAI between a very, very tight range. At the moment, the UI is a bit buggy because I zoomed in, but yeah, you could easily do it. But the problem here was that you had these individual positions, and now they were not fungible anymore, right? And the cool thing about fungibility of tokens is that you can use fungible tokens that represent, for example, liquidity in Uniswap as collateral in protocols like MakerDAO, where you can use these collateral tokens, put them in as collateral, and then borrow against them. In this case, for example, DAI. And this is exactly what you can do on Oasis here. On Oasis, you can put in your collateral like ETH, BTC, or these GUNI tokens that represent these fungible LP positions on Uniswap v3, and you can use them to open a so-called vault and borrow stablecoins DAI against it. And how you enter into these uni pools is via the website called SoBuy Finance, for example. There you got a bunch of pools. For example, this is the one which is collateral in MakerDAO, which is the DAI USDC one. It has around $190 million in collateral right now. But there are also a bunch of other pools that are listed here. For example, the ETH ENS one. And potentially all of these could be collateral in MakerDAO or whatever. So the cool thing about the unipools is actually now you can also create your own ones if you like to on the UI. This is a new feature we added. And yeah, recently the TVL of Gelato has grown quite a bit, and it now actually makes up roughly around 5% of the whole liquidity which is stored in Uniswap, which is pretty dope. And so yeah, this is a pretty cool thing that was built by multiple projects together, and this kind of came out here. And so yeah, we just wanted to use these this call to kind of like talk about, first of all, how that worked, but I think more importantly, what is next for MakerDAO, what is next for Oasis, what is next for GUni, like in the future, and so on. Yeah, maybe I think Ari, if you want to take over here, I think you had a question I think we can dive into right away.
Yeah, exactly. I think I have a couple of questions I really want to ask. It's a really cool group to have here, and I've enjoyed so much doing this MakerDAO integration with GUni, and especially happy that it's finally on Oasis on a front end that's really user-friendly, because this is like the last piece that was very sorely needed for this GUni MakerDAO like leverage stablecoin LPing to be accessible to anyone. So before we go into just the broad landscape of stablecoins, which I really want to talk to you guys about, because these are the people who can provide some answers there or get into a cool discussion about this. Maybe to talk just about this product itself. Maybe Frank, actually, could you tell us a little bit from your end what you see users? What benefit does this GUni integration and the ability to multiply your collateral, what does it give to users in the end? Like, how would you see it from the user-facing experience, what this is all about? Why does the user want to use this?
Yeah, so I think for why a user would want it is quite easy, because they will actually just get more yield on their initial deposit. And yeah, that they can do so by leveraging, as you said, the liquidity position, and yeah, specifically when they use Oasis.app, Hilmar already showed the first bit, but we actually enable the user to come in with DAI, so the user deposits DAI, and under the hood, we do all the complex stuff that thanks to you guys. So like we create the Gelato. We get the Gelato tokens from you guys, and then we multiply those to get the 50x leveraged liquidity provider position.
Yeah, and also I'm seeing already some questions in the chat, and so maybe to go, maybe we're rushing ahead a little bit to talk about how you would earn yield with GUni in general. Is yes, since you're providing liquidity to Uniswap v3, in this case with DAI and USDC, you earn interest in terms of as traders trade DAI to USDC or the other way. They pay a little fee. And these fees are captured by the liquidity providers, which is this GUni position, which aggregates all the users who want to provide liquidity to this market in this range. can do it through GUni, and as GUni earns fees, so do the token holders of GUni earn their proportional amount of GUni's earned fees. So right now, with the position that the DAI USDC GUni pool has, which is like a 20 tick range, a nice tight range right around 1-to-1, since DAI and USDC are worth about 1-to-1 to each other. We're earning around 4 or 5% interest. Now it's going down because of the introduction of a new fee tier, which we'll definitely talk about soon. But so this is how you earn interest, and a 4 or 5% interest sounds great, or yield generated, I guess I should say, instead of interest. Over a year, we're talking here for 4 or 5%, sounds great. But MakerDAO allows you to use this yield-bearing token as collateral to take out more DAI debt. And this is what we mean by going leverage, so that you can take out more DAI debt and put this DAI debt into GUni to multiply the amount of yield that you're earning. You can actually go 50x leverage. So if you were earning 4, 3, let's say, even if you're just earning 2% on your GUni stablecoins, multiplied by 50x leverage, you can get 50 times the amount of DAI you started with in debt, and supply all that to the market as well. You'll be earning something like 80 to 100% return over a year, which is obviously quite a lot on stablecoins, since it's pretty low risk. Other type of leveraged, other type of assets that you go leverage on, like if you go leverage on ETH is a very volatile asset. So if the price of ETH takes a nosedive, you have a really high chance of being liquidated. Here, the liquidation risks are much, much, much lower, and the risk of insolvency. So it's quite a high return for low risk. And so this is why we're all excited about it and talking here. Sorry, just wanted to go over the total basics to put us all on the same page. I guess another question, maybe for you, Sam, and I hope let me know if this is a bad question too, or but would be about when I talk to people about this product, because it's actually somewhat easy to understand, or even if you're not that into crypto, right? We're not talking about too many crypto assets here. There are actually 2 assets that are stable to the dollar. So to a lot of people, I can actually talk to them about this and say, hey, there's something you could do with your dollars in a way to basically earn yield on them. And it almost sounds too good to be true for most people, right? So they say, like, why if I start with $100,000, is MakerDAO willing to give me millions of dollars worth of a loan so that I can earn a great amount of interest on that while they earn a smaller amount of interest? It all sounds, again, kind of like too good to be true. So I guess, like, the question is, why is MakerDAO willing to do this? Why is MakerDAO willing to give people so much, such low interest loans of DAI in order to provide liquidity to this market? And basically, why isn't this too good to be true? Or what can we elucidate about why this makes sense for all parties, and something isn't like going wrong here? You're not stealing the money, you know? Yeah.
Yeah, so there's a couple components to that. And actually, I had similar experiences, sort of like, hey, yeah, you put your money in here, it's like, it's 100% APY. Like, what's the catch, right? Like, we're in a bull market, there's 100% APY everywhere, but like, it's all about how much risk is involved. So this, I would consider this a fairly as low on the end of risk as you can probably get in this space with this amount of return, definitely. So why can MakerDAO do this? There's a couple things that enables us to do this. So one is we have an excess of demand for DAI. This has led to us introducing things like the PSM to basically not prevent DAI from, blowing up to $1.10 or something like that. It provides price stability. So that has enabled us to, and so we don't earn any yield on that. So if we can find something with better yield, such as providing liquidity to Uniswap via the GUni token, that'll be better for us, because we're earning currently 0.5% on this vault when we were earning nothing in the PSM. So that's just better for us. We also get some sort of additional benefits, sort of boosting the liquidity on Uniswap is great for DAI. Having it as a very huge pair people can trade through is great. That's sort of a good, yeah, there's many facets to this for sure. Yeah, there was something else I was going to say, but I've forgotten. But yeah, basically that's it. We have an excess of demand, so we're trying to find more uses to it, and we just have so much excess demand. You can actually measure it. We have like billions of dollars of excess demand we need to put somewhere.
I see.
Maybe if I can jump in real quick, where's the demand coming from, or what is dry? What are the main factors here?
Right. Okay. So this is maybe slightly getting out of my area of expertise. Risk sort of looks at this stuff more, but it's sort of a couple of things. There's actual usage going on, organic usage, but additionally there is a sort of yield farming type craze going on right now. So that sort of draws in a lot of DAI. Stable coins are often the tokens being targeted for these yields. So Curve, whatever, they all run these yield farming things, and it just sucks in a lot of DAI, as well as other stable coins like USDC and whatnot.
Yeah, and I would imagine it's also the part of the cycle where people already made quite a bit of return over the past 12 months or longer, right? And I think a lot of them are, first of all, rebalancing into stables, so they need stables. And then I think just talking to friends of mine who just run like traditional startups, not like crypto startups, and they raised like a couple of $1 million in fiat. They literally come to me and say, hey, we pay in Europe, we pay minus 0.5% negative interest rates on the millions of dollars that we raised. And they're literally asking me, how can we move our entire treasury of our non-crypto startup into DAI or UCC? And what's like the best way to do it, right? So I think there's a lot of money just flowing into crypto, not necessarily into ETH, but or like volatile assets, because this is just like risk profile. So just for like really risk seeking investors, but like a lot of people, I think the property of just earning a decent interest, and they don't even come for the 100% G-Uni 50x leverage. They come for the 4% interest, or like literally zero, like even 0% for them would be interesting, right? So that's probably where a lot of demand is coming.
Yeah, I mean, this is what I would call the organic usage, right? So like, I mean, I use it all the time. Like, Maker people are paid in DAI. We use it like every day. So it's like, there's definitely actual use cases here. And so that's what I sort of basketed under organic usage. So there's definitely that too.
I see. So there's organic usage, and there's this incredible demand for DAI also coming through all this yield farming craze and just all the activity happening in DeFi. And in fact, if people use this 50x leverage G-Uni solution with Gelato and MakerDAO here, there's a lot of good properties, like you said. One is you really strengthen DAI's peg with USDC inside of Uniswap, right? This pair gets a lot of traffic, and it's very easy to swap on Uniswap, DAI, and USDC. And also, of course, MakerDAO does earn interest on all of the collateral in this vault, this 0.5%. Instead of earning nothing in the PSN, now actually there's revenue going towards MakerDAO in the form of the 0.5% stability fee that everyone who has a G-Uni vault is paying on their collateral, which is worth noting. You don't get the DAI 100% for free, right? This 50x leverage. You do actually have to pay a small amount of interest. But luckily, that rate has just went down from 1% to now 0.5%. So it's very, very low interest rates on these loans.
Yeah, and maybe if you allow me to also add something on this topic, regarding the too good to be true, before people start putting their DAI into this, it's good to for them to also check out, make some calculations, like the amount of gas that you will need to open and close your position, see if the stability fee is actually higher than the non-leveraged APY on the pool, because if the non-leveraged APY on the pool starts dropping below 0.5%, you are actually losing money because you need to pay the stability fee. So that's an important risk. And also we if you're using Oasis, we are actually charging a small fee on the initial deposit. So you also need to account for that.
Yes, and it's quite interesting as well, because the yield that you get as an LP is very different than sort of the classical yield, even in a lending market where you just earn the sort of the same rate over time. Here, the yield is very different day to day. So some days there's a really big day and a ton of trading and you earn a bunch of yield, and other days it's very, very quiet. And even as someone who has participated with one of these vaults has actually seen that on certain days, the interest I was paying on my DAI was on some days more than the amount of yield I was generating that day from traders. And so you can actually see in real time sometimes the total value of your position going down a little bit, and then some days it surged completely. And in general, on average, it certainly has been above that 0.5% interest, but it's interesting that it's not smoothed out, right? Because the yield you earn as an LP is totally variable, something I noticed in real time in production. And I guess maybe getting to the juiciest topic, or what I really want to talk to you guys about, is about this liquidity fragmentation in Uniswap, right? Very recently, the 0.01% fee tier was enabled on Uniswap v3, and this seems like it's going to change the landscape of stablecoin LPing, at the very least on Uniswap, and maybe all over, because this is a very competitive fee tier, is the thing to say, and the fee tier really seems to matter on stablecoin in stablecoin markets. Why? It's because for most other tokens, really the amount of liquidity is the most important thing, because if people are swapping, if there's low liquidity, you get huge slippage on the trades. But with stablecoins, which have very tight bounds anyway, even if LPs don't have a tremendous amount of liquidity, they know exactly where to target the liquidity. So either it's on Curve, where the way the AMM works is like specifically suited for stablecoins, which are highly correlated in price, or it's on Uniswap, where you can have these concentrated positions, and of course everyone putting stablecoins highly concentrates their position. And so in the end, basically, it's not liquidity that matters, because you're not going to get price slippage no matter what. It's really the thing that matters the most is how much of a fee is taken off the top when you trade. And so the introduction of this new 0.01% is very, very low, right? Uniswap, the old-fashioned Uniswap, it was 0.3%. So this is a huge reduction in fees. I guess to the whole group here, what do people think this means? How competitive do they think this will be against other markets like Curve? Yeah, what do you think about these? And maybe in general, what do you think about these fee tiers? Because we're noticing in real time that this 0.01% fee tier didn't exist before. And when we created this GUni product, it didn't exist. And all of a sudden, it's come into existence. Some liquidity has gone into that pool, and we have this liquidity fragmentation where we're losing out on some fees, but also that pool is losing out on fees from us. Basically, there are two choices on Uniswap v3 of where to get your DAI USDC liquidity. So what do you guys think about all of this? The liquidity fragmentation, the 1%, the 1 BPS fee tier. Thoughts from you three? Would love to hear.
Sam, want to go first?
Sure. Yeah, I don't know. It's very interesting to see this stuff evolving in real time. It's kind of funny. It got introduced like right as soon as we upped the debt ceiling on the 5 bips tier. But you know, Maker's kind of neutral on this stuff. So like, if liquidity moves to the other pool, we can just spin up another GUni token. I don't really think it's an issue. Now, sort of, where do I think it seems like it's a little bit of a race to the bottom in terms of these fee tier things. So I don't know how low that can go. I mean, definitely the ones that that have cost of capital will require some fee to be there. Whereas say Maker, we have the PSM, which we are providing at no fees, and we can do that because it doesn't cost us anything to mint DAI, right? So this is kind of a fundamental difference when you have sort of counterparties that have to LP versus like Maker, which sort of, yeah, we can mint DAI however we want. So that'll be interesting. I think this might be close to the bottom. I can't see like going below 1 bips. Does Uniswap even support that?
I think technically it's possible. If you see the fee, the way they do the bips, the fee number is still considered 100, which makes me think that you could go all the way down to 1, which is 1/100th of a bip. Since they have that level of precision. But I agree with you. I doubt we're going any lower than this. This is already quite low fee here.
Because the LPs do need money or they're not going to deposit. If the APYs get too low, like you just won't get the funds there, right? So there's a equilibrium here. So wherever it is, I mean, we can add a GUNI token and Maker can add it wherever that ends up being, right? So we can be pretty neutral on this, I think.
And I think it depends also on the volume, right? So if the volume just like keeps growing exponentially on these markets, then more TVL would be required. But what I really think is like this: we had these higher fees. I think that the issue in the first place was that we actually had these 0.3% fee tiers in the first place, right? Because if you think about it, like a crypto stablecoin. The scenario we're in right now, where we have kind of like 2-3 dominant ones, let's say we like with USDT, USDC, DAI, and then also like other ones coming up, right? This is just like a fragmentation and introduces friction because you always need that swap, right? And how it's supposed to be, or like how it should be, is that you had like either you have one token that is just this stable coin that everyone uses, and then you don't even like the dollar, you don't just swap all the time to like a European dollar, right? It's just like a dollar, and it accepts that like, it doesn't need to be swapped around. Whereas in crypto, you have these multiple dollars running around, which is, I think, just still the immaturity of the market we're in right now. But in the long run, either we find a way to make it so that, like, I think fees will be like zero. Either we will still live in a world where we have multiple dollar or like stable coins that say it, which I don't think so. I think one will be probably adopted in the long run. I'm talking like 5-10 years, and there won't even be the need to swap it, or there will be this kind of like everyone can have their own US dollar currency. All communities can have their own ones, right? And then fees must be close to zero. Otherwise, like in the long run, it doesn't make sense to actually extract. It doesn't make sense to extract value from like swaps from tokens that should be worth the same, right? They should be free, like the PSM currently provides. Everything else is just friction that is still some problems from back then when there are just multiple projects launching. So yeah, I think that's also an interesting question, right? Like how long will this whole fragmentation of stablecoins remain, right? How long does it take for some of them to be predominant? Is it actually possible for something like DAI to really grow to such an extent? Because I think, Sam, what you said, the demand is crazy, right? I can imagine so. Like imagine just like a couple of % of all the world's money flowing into crypto. Like, is it actually possible to satisfy that demand with something like a DAI, or like is there a limit somehow? Because you have to add collateral to it, right? To mint it. Like how does it play out in the long run? Like is there a way to scale this to the global stablecoin everyone will be using one day?
Yeah, and so this is exactly why Maker has taken the position of moving into real world assets. Like there's not enough collateral in just DeFi to sort of satiate this demand alone. So we have to move out into these, crypto is big. It's getting way bigger, I guess, in the past year, but like it's still peanuts compared to like some of these other markets in the real world. And so like connecting into that is essential for us to scale DAI to sort of this like, world reserve currency type style of demand. So we're far away from that, but we're working hard, and the real world assets is the only way that I can see to do that.
So interesting, and it's super interesting with also the existence of the PSM and the PSM fees going all the way to zero now, which I think is a really meaningful moment for stable coins in general. I saw a lot of posts on Twitter about this, and at first, actually, as as the creator of GUni, which was earning, I sort of saw this as like the great place for DAI to be parked, and the way to strengthen the peg for DAI and USDC is place all the liquidity in the Uniswap market, and we can earn these fees. And I wasn't sure about the idea of the PSM going all the way, fees all the way to zero, but I actually started to understand the idea a little bit more when I saw some posts on Twitter and people who were in support of it, and understanding that this is kind of a world like Hilmar is talking about, where sure, you can have your other stable coins if you need to off ramp with that stable coin, or you're part of this certain ecosystem, but they can all live under the umbrella of DAI, because DAI is willing to swap them 1-to-1 for you. So if you have USDC, here you go, turn it into DAI, and it's with no friction. And there is something kind of beautiful about this, and I see a future world wherein DAI can be sort of this universal reserve currency, or be the stable coin from the perspective of the general public. And if you need these other more niche stable coins for a specific reason, you can always turn them in and out of DAI if needed at no cost. And I saw actually the power of this vision. So I thought that was this pretty interesting development in stablecoin ecosystem.
Yeah, for sure. And so actually that proposal to set the fees to zero was coming out of this real world asset stuff. And specifically fiat on off ramps, connecting into the real world is very important for Maker. And so we were receiving sort of feedback that it was kind of a pain to, go to USDC to exit, and then to get back on to repay the loan. You have to go through a volatile market, like Curve or something like that. And so this is just headache that we can get rid of. And so during this discussion, I kind of thought about it a little bit as well, like sort of, maybe this is just going to crush all the stablecoin markets. But I'm not so sure about that, and I think there's kind of two effects here that is preventing that from happening. One, the PSM is actually just more gas intensive. So if you go to like 1 inch and just USDC to DAI or something like that, you have to go up over close to 1 million before it starts being better to go through the PSM versus like Uniswap or something like that. So we're definitely not crushing things out of existence. There's going to be smaller trades can go through Uniswap. I mean, the other thing is like, I'm not convinced that like retail is super sensitive to these prices. I think people prefer their AMM of choice and they just will use it, and maybe they pay a little bit more, but like I think you see examples of this with like MetaMask, right? There, people just love swapping through there. They charge an extra fee on top of there, but people don't care that much, right? They trust MetaMask, they want to use it. So I don't think it's as simple as just the cheapest one's going to win kind of thing.
Yeah, no, I agree there with Sam. And on the race to the bottom, especially like on the Uniswap side, I'm not sure I completely agree with what Hilmar was saying, in that that it should always be feeless. For the PSM, I think it should be feeless, and I think there should and will probably be more PSMs coming, relatively soon. I think. No, we just had the Paxos PSM go live, and if anyone wants to open up an application for another PSM, they can do so on the Maker forums if they like. But on Uniswap, as Sam said, there is a cost of capital, and also if you want to combine that with Gelato and with Maker to create these leveraged products, then there's a cost for Maker, in the sense that there's an Oracle cost that needs to be paid somehow. For the user, the gas fees are higher in entering these positions instead of entering as an LP directly. So there's a trade-off there as well, where for the user, where it might make sense for some fee tiers to not exist at all, or to only exist where you LP directly and not create this leveraged LPing.
Yeah, and I think one thing, Frank, that you mentioned before, what I would like to touch upon is you mentioned that if you're in the DAI UCC v3 pool of Uniswap without GUnI, you're not gonna make it. Do you think that could it be, or like, is the scenario possible that at some point, because to actually earn some good enough yield on these very low fee tiers in Uniswap v3, that we come into a scenario where it actually only makes sense to provide liquidity via MakerDAO into these pools, and that kind of like this liquidity, like if you imagine $500 million worth of liquidity in the 0.01% fee tier, or where we are at, like, is it, and people can go 50x leverage in there, like, does it make sense for anyone else to put money in there?
Yeah, I think the direct LPing for the 0.05% pool already doesn't make sense, probably. So yeah, if you want to do that, you probably should do it through Maker, which is like already a crazy achievement in my opinion, from the Gelato guys and also a Maker to see this opportunity. Like, I don't think we've seen such a perfect product market fit for collateral for Maker in quite a long time. So yeah, in that sense, I think if you're in the 0.05% tier at the moment as a liquidity provider, please think about what you're doing and if it still makes sense.
Yes.
You're not gonna make it.
You're not gonna make it unless you're in GUnI. And I think even now, long term, I see this world. I see at least what the perfect world for me, and of course, extremely biased as one of the people working on GUnI, is that. Yeah, that the game theoretic equilibrium we reach is for these huge trades, right? If you have millions of dollars and you need to turn all of it from DAI into USDC, you should be using the PSM and you should do it with 0 fees. But still, there are tons of people who need to trade smaller allocations, or also who might be making a different trade on Uniswap that has a route that would be connected by a DAI pair and a USDC pair. And so its most liquid route with the lowest slippage would actually go through this DAI USDC. There's still a huge amount of demand for trades in there, but that most of I see a world where, again, biased, but where you basically have for these huge movements, you use the PSM, and for everything else, people will probably be using the DAI USDC 0.01% fee tier with with almost all the liquidity probably leveraged through MakerDAO in a very tight range there. And now the ranges can be even tighter, right? The other amazing difference about the 1 BPS fee tier is that the ranges are now the absolute smallest possible range you could put in Uniswap, as in you're allowed to provide liquidity between just one tick to another. Whereas the other fee tiers, the buckets you were allowed to provide liquidity in were at the minimum on the 5 BPS fee tier was a 10 tick bucket. And we want it to be on both sides of $1, so we're actually a 20 tick range in the current GUnI that we're here talking about today. But with 1 tick, now you could eventually, all the liquidity could be in just a very, very extremely small band, a band that's even smaller than the smallest bucket you could have done on the 5 BPS fee tier. And I see that as kind of being like, probably this could be the bottom in my opinion. I don't see how you could get more competitive. And I see basically a potential for Uniswap to steal a lot of the volume of Curve, basically, with this, which it would be really interesting to see what happens. And it's because it's also so true what Sam and everybody was echoing, which is, and also in the chat here, someone said, whales love a discount, shrimps love UX. And it's actually really true that we all use our AMM of choice, and we often don't sweat the fee. We like what we know and the user experience that works when you're a small holder, and only when you're, when you're transacting millions and millions of dollars, of course, you do sweat a few basis points, because it makes a huge difference. And so, yeah, I think it will be interesting. It's always interesting to see how the volume moves. I think the one thing that counteracts this is the fact that some of the best UX is in the aggregators. And so then the aggregators find the best price for the users. And that's how, even though people love Uniswap, I'd say from a UX perspective, more people know Uniswap, more people use it. Curve still gets the majority of the stablecoin volume. And that probably has a lot to do with the aggregators, understanding that users would get a better rate there. But so yeah, I'm always wondering about when and how these aggregate, like when the best rate actually is where all the volume goes and when it's not. And it's a really interesting, subtle issue. So
yeah, maybe to just like build on top of that, a question from my side is, what do you guys think? Well, what will be the impact on Curve from these changes, these recent market changes here? Will they still be able to remain compatible? And if yes, how so? Maybe Sam, if you want to take it, and then we can move to the others.
Sure. I mean, I believe they've had mint control over the fees. They can just lower them to stay competitive, right? I don't think they're just going to take this line down. So yeah, I think that's my view of it. And there's like Curve has like liquidity mining as well. So that's like a big factor that just kind of skews things a lot sometimes. So yeah, I don't know. I think in the long run, aggregators will probably take over, get some sort of power law distribution with something like 1inch or 1inch like or whatever, just sort of providing this very, very advanced routing. And to add on top of that, there's not only through Ethereum mainnet, we're going to have to deal with routing cross-chain when L2s start blowing up. So this is going to be a big space to innovate in. And whoever does this well, I think will take a lion's share of sort of the token/chain routing and stuff like that. And in the end, I think it'll just be like, I'm on chain A, I have token 1, and I need to move to chain B, to token 2, and it'll just do everything, right? Give you the best rate. Just, yeah, that'll be the best product, I think. And I'm excited to see what people come up with.
Yeah, like I agree with Sam on the Curve thing. On the liquidity mining, you could also see the liquidity mining as part of like a fee. Well, it's not necessarily a fee, but it's a finite game, I think. So in that sense, it's also not sustainable for the very long term. Or there need to be some kind of mechanics that I'm not fully aware of. However, also commenting on the L2, I think GUni with when Maker is on L2, so Sam's next project, so to say, then the GUni DAI-USDC V3 pools will be massive, because the fixed costs of setting up and closing will be negligible. I can't pronounce that, but you guys know what I mean. Will be very small in comparison to your initial deposit, whilst they are a serious percentage at the moment. So yeah, when the fixed cost of setting these positions goes down, the liquidity provision will also be more find a different equilibrium between the pools.
Yes, very excited for GUni on L2. It is not yet, but it will be soon. And I think because of the changes in gas fees this changes everything for all of the experiments we can try with GUni as well, including dynamic ranges that are rebalancing all the time. So yeah, interesting possibilities there.
Yeah, I think also. Yeah, oh, sorry, please, Frank.
Can I do a feature request there?
Please.
It would be so great to not have to onboard the 0.05 and the 0.01 and the whatever will come next pools, GUnit pools, but rather have a single fungible GUnit ERC20 that can be onboarded into DeFi, and then it gets rebalanced every time the user deposits DAI into it. I know it's not trivial. Sam already said it's near impossible, so I'm just.
I did not say it was near impossible. I just said it's a bit of work.
Yeah.
Definitely some work there, and we debated many times about whether or not each GUnit asset should actually be able to be rebalanced across fee tiers. And now I wish that we had left that in, to be honest, because we could have potentially, without making all the users leave and go into a new and onboard something else, we could have magically moved it over to the 0.01% fee tier. But there's many trade-offs there and lots of details to think about as the implementer here. But yeah, no, definitely think.
I remember the issue I opened back then. But yeah, there was the problem of you kind of always moving to the pool that just had the biggest volume, and then you move all your TVL over, and then the other one just picks it up, and then you kind of move back and forth. There are a lot of you always kind of late to the game, but yeah, there are a lot of small details to consider. But yeah, I think I'm also excited to hear from you guys what's next for Maker and Oasis.
Yeah, so I think I agree with what you say about sort of the future being this sort of more automated cross-chain type LPing. I think it's been proven time and time again that lazy LPing has its place in DeFi, and so many times way back to Uniswap V1 launch, people are like, "There's no way everybody's gonna just pool all their money, and it's so capital inefficient." But then you're wrong, right? People do want to do that; they want a lazy LP. So I think there's a huge place for that in the future for sure. The future for Maker, I mean, that's kind of a big question. I mean, I guess with specifically the GUnit stuff, onboarding the 1 BIPs tier, I think makes sense to me. As well as, we could, so the issue with Maker and sort of having these sort of actively managed positions is we have to be super conservative with our risk. So one of the reasons we could proceed with the DAI USDC pair is because we use a fixed range. There's no administrative capabilities to rebalance the range or whatever, which is a risk for us. So perhaps there's some way we can do that with maybe non-stable stable pairs. I mean, other things that make sense are things that are derivatives of the same asset, such as staked ETH or whatever. That can also cater to a fixed range. We could also have larger fixed ranges. I think that's a possibility. We do FDAI or something, that pair, and just have $1,000 to $40,000 range, and maybe it'll be good for a few years or something like that. So there's definitely a lot of options here. So I'm interested in exploring more of this stuff.
Yeah, highly correlated assets, I think, are quite nice for these wider ranges. And yeah, I could foresee the future where we not only have 5% of Uniswap TVL, but maybe 25 or something when we onboard even more assets, right? It could be well of a possibility.
Exactly.
And this fixed range you mentioned about ETH DAI, I find really interesting, and it's changed my perspective about Uniswap V3 LPing, where you can really think about every position you take as a limit order or 2 limit orders if it's in range. And so really it kind of makes sense. If a lot of people are willing to provide liquidity to ETH and DAI and say, well, I'll sell all my ETH by 40,000, like you say. And if we all agree that this sounds good to each of us and we're willing to put in that limit order on our ETH, which is, you can actually figure out the strike price, which is somewhere between the price you started at and the final selling price. And if everyone's sort of on board with that same limit order set, then it makes a lot of sense to even have this large fixed range LP that is even on a volatile asset like this. But anyway, it's just to jump in there and say it's changed the way I've thought about Uniswap V3 LP. please tell us about the future of Oasis. Really excited to hear.
Cool. Yeah, I first want to thank Hilmar for dropping that alpha on Gelato, because I hadn't heard that before, and I think I'm gonna check out some gel now after this call. No, but in terms of Oasis, well, Oasis and G-Uni. First of all, I wouldn't say we rushed to launch, but we went quite fast with our front end, and like we had a big design, and eventually we only went live with the first bit of the design, which is just opening the position to get everyone in there, because the demand of our users was crazy, and we saw that when we went live, we had tons of transactions immediately in the first day. However, we want to help our users get out of these positions as well. So yeah, we're gonna launch that within the coming 2 weeks, and watch out for announcements regarding that, because we want to make it. We want to make it a little bit cheaper to get out of your position than it was to get into your position. That's that. And then a brief look into the future is that we see this G-Uni as like our first strategy to earn yield on your DAI. And we want to be looking into much more lazy strategies to get yield on your DAI. So yeah, you can watch out for that as well.
So exciting and so much benefit for users. I think there are tons of users out there who would definitely be willing to lazily earn some interest or some yield on their DAI, but it has to be easy, and it has to be like have this nice UX that users love, and I think that's what Oasis provides. So really exciting. Before Oasis, you could still go leverage, but you had to use Sam's contract, and you had to be in the know about how everything worked. So it was really not for your average user, and so it's really exciting to me that this Oasis multiply product exists. I love it. I'll be using it for sure.
The Etherscan contract is only for real apes.
Yes.
for true DJs. I think that pretty much concludes everything quite nicely. I think it was a great episode here. Got some awesome insights into stablecoin liquidity and just liquidity provision in general. Maker's future, Ace's future. What's next for G-Uni as well? And I think there's a lot of synergies here, and a lot of we're making the markets efficient, right? This is also what kind of like DeFi is supposed to do, right? We want to cut costs. We want to enable frictionless value transfers across all different chains and for everyone, right? And this whole thing has to scale to everyone in the world. So we are providing our part to it, I think a lot of more engineering hours are demanded from us, but we're all gonna make it. I hope, and I'm quite sure about it. And so thanks a lot, Sam, for coming on, Frank for coming on, Ari helping co-host this, it was a pleasure, guys. And for everyone, check out MakerDAO on Twitter, Oasis, Discord channel, the Gelato Discord channel. If you have questions, if you want to use it one way or another, we are open to that. And thanks a lot, guys.
Thanks.
Ciao.
Thank you, guys.